Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value, and I'm scrolling through the comment section, trying to read all your guys' comments. It says, Andy, when buying platinum now and later selling it in the future, do you think it will be possible to sell for the over-the-spot price to recover premium we are paying? And yeah, I do think so. I do think that there's a high likelihood that when platinum becomes in favor, that people are going to pay a premium for it. But more importantly, you're buying a physical metal. You're diversifying out of the system. That's the point of buying the physical metals. And when you look at all these things, there's really only three things that have preserved wealth, over time. Precious metals, art, and real estate. Everything else, goose egg zero, goes to zero. How do we know that any of these electronic things are going to hold their value over time? I would say that there's probably a likelihood of zero. Most of these things, these NFTs, cryptocurrency, I'm not buying it. Those three things have held its value for thousands of years. What makes you think that now something electronically that was just created is going to hold its value? I don't think so. New things will come up, new things will replace it, and it will cycle through. These three things haven't been cycled through, at least not yet. And I think they're going to hold their value. Now, I know you guys are asking me, should I buy some ETF that has platinum in it? My answer is buy the physical. You got a premium that you have to pay, that's correct. You pay a premium just like you would with car insurance, home insurance, health insurance, any type of insurance. You're going to have a premium. And I don't know how a country would know how to tax this. Go to your dealer, find out how much it costs, pay cash for it. Take the physical, do whatever you want with it, store it wherever you want, store it in a safe place. I'm sure you've got options. And what are they going to do? Come find it and shave a little bit off of it? Are they going to come there with a little knife and start shaving some off? They can tax your stocks more than what you think. If you're out of the system, I don't know if they know how to tax it. How do they know you own it? Platinum is incredibly scarce. Incredibly scarce. Guess how much platinum there is in the world per person? Approximately zero. When platinum goes scarce, and everybody wants platinum for all the things that they want to do in society because of the utility that it brings to society and the value that it brings and all of the new ways that we can use this incredibly exotic material. Remember, this is a very new material in comparison to what we know about its uses. It has a very high melting point, and hundreds of years ago, we didn't even know how to melt this thing down. Now we know how to melt it down. Now we've got a lot more technology, and technology is requiring us to use more exotic materials in designs. Platinum's being grown, its uses is growing over 5% in terms of demand per year. Over 5% demand, about 5% demand per year. It's been growing year after year. And guess what? When you grow something at 5%, that's an exponential curve. There isn't much of this stuff. Guess what's going to happen? Shortages. You're going to see shortages of palladium, platinum, and rhodium. This stuff is not that, it's not that plentiful. And if everything we want to do in the future is driving us towards exotic materials, and this is an exotic material, and no one owns it, but everybody wants it, what do you think the price of that's going to be? How much value is that going to give to humans? And if you can't redeem, if you buy all these ETFs and you can't redeem it for physical, well, what's the point of buying it? What's the value of that ETF? And I'm talking about down the road, and I'm talking about a very scarce mineral. Now, here's a risk. You own the mineral. And this very well could happen, and it is a risk. But they're going to go in and say, you know what, we're going to buy out the ETF and we're going to take all the metal out of it. How much is that worth? And what happens to you? You just got bought out and got a bunch of dollars or paper currency or whatever it is. What if the mining company that you're in a mining company and they nationalize it? Well, how much value is that to you now? Having the physical metal in your hand it's a pretty low risk way. Now, there could be ways that they try to figure this stuff out, but remember, on average, there's 0 ounces per person. You know what the physical bullion is above the ground for platinum? I think it's around like 8 million ounces. 8 million with an M. You know how scarce that is? It's not a lot of platinum. 8 million ounces. That is ridiculously low. I think gold's around 3 or 4 billion. Silver's a little bit more than that. Maybe 4 to 6 billion or 8 billion, somewhere in there, ounces above ground. 8 million. I mean, think about that for a second. Gold, and maybe I'll pull this up here real quick because it's just so ridiculous. If gold's at 3 billion ounces over 8 million, it's 375 times more rare platinum is than gold in terms of investable above ground bullion. Gold, everything gets pulled up and stored. Platinum, much more scarce. There isn't much inventory of platinum. We're talking, the COMEX may have, I think I read something like 170,000 ounces. I mean, this stuff is so rare and the inventories are so thin that anything could happen. And we can own it for half the price of gold almost. I mean, not literally half, but it's pretty close, 0.6. And we can own this for less than half of palladium, and palladium is very rare as well. So I'm looking at this from the big picture view, big long-term view. And a way to diversify out of the electronic game that's in there, owning these electronic stocks with electronic this, electronic that, you can get the physical metal. That's a diversifying aspect of buying physical metals. And I'm looking at it with the ratios where they're at. It's never been this cheap in relationship to the other metals. That means that when people go to design something in a product, they're going to use what's cheaper. Platinum's cheaper. Go use platinum. Why would they choose something else? Unless there is a vast difference to the end product that justifies the higher cost. So I like the physical metals. That is like the best option in my opinion. The next best option is royalty companies, and then the last is the mining companies. And remember, some of these mining companies, sometimes they don't follow or track the price of the physical metals very well. They do well in the beginning, and then they kind of tail off, and they actually underperform the metal. If the metal has that much lower risk, it might be better just to do the physical metals. And that's what I've done with a lot of my money. I said, I'm not gonna risk whatever the mining companies have. I'll just take the physical metal and then do my swapping game. And that's what I do. And I have to pay a little premium to do it. But what if taxes go way up on stocks? Are you factoring that risk in? So I'm just asking you guys questions. Are you factoring the risks of higher taxes in stocks? They've talked about it with higher net worth individuals, but I'm just looking at it. Diversify a little bit. Try to figure out ways to reduce your taxes. And not many people own physical metals, so I don't think they're really going to go after them. I mean, in relationship, the entire market of platinum, like, it's hardly worth anything. If we have 8 million ounces of investable platinum, and platinum's at $1,000, that's $8 billion. That's literally nothing. Some of these rich guys could buy it all up. All of the bullion in the entire world is in their ownership if they wanted it. I mean, it is so rare. It is so rare. So I look at this and I think it's a pretty good bet. That's my opinion. And that's some of the reasons why. If you guys like this content, give me a thumbs up. Thanks for listening. This is Finding Value.